Hello, everybody, and welcome to my session of Let's Talk About Life insurance, that is. So, I want to welcome each and every one of you to our live session today. And this is basically where we're talking about life insurance. Life insurance. So I'm here spilling all the tea, everything that you need to know and probably don't know about life insurance. I'm here to share tips and information that you can utilize um, before you make a decision on what type of policy you want, or even if you already have a policy, you can go back and check and make sure that you have the right policy for you and your family. So with that being said, we're going to go ahead and we're going to get started. First, I like to start out by telling everybody to please, ma'am, please, sir, please share the live. Please share the live. For those of you that are over on Facebook, those of you that are over on YouTube, please go ahead and hit that subscribe button so you won't miss out on any of my lives. I'm here on Monday on Tuesday and Thursdays. I'm here every Tuesday and Thursday, and I'm spilling the tea about life insurance. Everything you need to know about life insurance. Okay, so if you're over on YouTube, go ahead and hit that subscribe button and make sure to hit the alert button so you won't miss out on any of my lives. And those of you over on TikTok, welcome. Thank you for joining me. And if you guys are here for the first time, please go ahead and hit that subscribe button so you won't miss out on any of my lives. I'm here on Monday and Tuesday and Thursday. And I know y'all keep hearing me say Monday, which I am live on Mondays, but I'm live on Monday mornings actually doing a chair workout on Monday mornings, Monday and Wednesday mornings at 10 a.m. So that's why you keep hearing me say Monday, but on Tuesday and Thursday, I'm actually here giving you tips and information on things you need to know about life insurance. And so I like to always give my credentials before I get started. I want you guys to know that I'm not just here and just giving information just to give it. I'm here because I'm a licensed agent. I've been licensed now for 15 years, going on 16 years. And I'm here because I want you guys to be educated on insurance, on life insurance, so you'll know how to go about picking the right type of policy for you and your family. You don't want to wait until the last minute. You don't want to wait until you need it and then find out that you don't have what you thought you had. Okay, so it's always good to know what you have before you need it. Okay, so that's why I'm here trying to educate the public on things that an insurance agent they're not going to tell you. They're basically not going to tell you a lot of this information, because if they share this information with you, then a lot of times you won't purchase these policies that they're trying to sell you. So, like I said, I want you to be educated on the type of policies that that are out there. So you'll be mindful about what you choose or select for you and your family. Now, today we're going to talk about return of premium. They call it an ROP, return of premium term life insurance policy. Beer, I'm alive. Beer, I'm sorry, y'all. I'm I'm sorry. Background noise. But today we'll be talking about return of premium term life insurance policy. And I know you've heard or seen commercials all over TV saying, "Oh, you get all of your money back. You get all of your money back at the end of the term." So what I'm here to do today is to share with you what that really means, what that really looks like. What are they really talking about when they tell you that you get all of your money back? Thank you, Jeanette, for sharing. Thank you so much for sharing, Jeanette. And as you get on, y'all, please share the live. Please share the live. If you're on TikTok, please, TikTok, you can hit that subscribe button so you won't miss out on the next live. YouTube, please hit that subscribe button also. And please comment. I want to hear if you guys have any questions about anything that I'm trying to share with you all today. Please comment in the comment section. Put your question in the comment section, and I'm going to try to get to it. As swiftly as possible. Now with TikTok, the comments and everything is going by scrolling by so fast. So forgive me if I miss your question. If I miss a question that you post on TikTok, please repost it and until I answer it. Okay, I'll just put it like that. Repost it until I answer it. But getting back to what I was saying about the return of premium life insurance policies. Here's how it works. Okay. So basically, it is a term policy. It's a term policy like where you can get it for like 20 years, 30 years, just how many years you want to take the term policy out for. It's a term policy. This type of policy, a term policy, does not hear me when I say does not have what they call that so-called savings account attached to it. Savings account, y'all. Let me I forgot to take my Bluetooth off. I'm sorry. And I know over on YouTube and TikTok, y'all probably was hearing an echo. Not TikTok, I'm sorry, YouTube and Facebook, because I forgot to take my Bluetooth off. So I unhooked my Bluetooth. But so here we go. So yeah, so it does not have what they call that so-called savings account attached to it, meaning that you don't have money that's accumulating in that so-called savings account, where you'll be able to take money out as it accumulates. It's not that type of policy. It's a term policy. With term policies, basically, you are just paying for the insurance and insurance only. Okay. Now, if you outlive the term with these return premium policies, if you outlive the term, the insurance company will refund all of the premiums that you paid. But I'm going to share with you there are some stipulations when it comes to that. That's what I'm going to share with you. And they return these premiums to you, and they're supposed to be, and they are tax-free. Okay. Now, if you die during the term, your beneficiary would get the death benefit like a regular policy, like any other regular term policies. They would get the benefit. They would get the beneficiary would get the money. They would get the money that's promised to them. Whatever the policy says, the coverages, that's what they would get. Now, return of premium life insurance, it can sound appealing. It can really sound appealing because they're telling you you're going to get your money back. You're going to get your premium back if you outlive the policy. But there are some key things they won't tell you. There are some key things that they won't tell you that you really need to know. Now, with the return of premium life insurance policies, and y'all, I'm looking back and forth because I'm over here on Facebook and YouTube, and over here I'm on TikTok. So that's why I'm trying to look back and forth, because I don't want nobody and no platform to think that I'm ignoring them. Okay, but here are some of the cons. Some of the cons, meaning the negative things about this type of policy. The main thing is the premiums are so much more higher than what you're going to pay for a regular term policy, you guys. The premiums are so much more higher than what you pay for a regular term policy. They are 2 to 3 times more than what you're going to pay for a regular term policy. So you're paying significantly more for the return of premium benefit. They're not telling you that. That's what they are doing. This is how they are able to give you your money back. So you're basically paying them
you're basically paying them extra for them to hold your money for you on the side for 15, 20, 30 years. So you're paying them extra just to hold your money for you. Now, the extra money you're paying in the premiums could potentially be invested if you didn't go that route. So think about this. Let's think about this. They're going to hold your money for you. They're going to hold your money for you for as long as you have the policy. Say you got a, let's say you got a 30-year policy. So they're basically going to hold your money for you for 30 years in an account. Like you can't hold your own money. But this is the kicker. This is the kicker. They're going to hold that money for you. So you're paying them extra to hold your money for you. But then that money that's being held on the side for 20 to 30 years, it's not drawing any interest. You're not drawing any interest on that money. It's just basically sitting. It's like they call it sitting duck. It's just sitting there, not drawing any interest at all. But guess what? You're giving them this extra money to hold for you, but they're taking your money and they're basically investing your money themselves. So they're really getting the benefit out of you paying for them to hold your money for you. They're taking your money and investing, and they're investing in, because insurance companies, they invest in like big shopping centers, they invest in malls, they invest in stuff like that. So they're taking your money and they're going to take your money and invest it. And you're just putting it aside when you could be taking your own money. You could be taking your own money and you could be investing that money yourself. So it's not just sitting there like a sitting duck and not accumulating any type of interest. It's not accumulating anything. Nothing is going on with your money. Just sitting there in an account that they have for you. Now, the money you get back, you are going to get back your total amount of premium. So if you invested whatever you invested in it, whatever payments you made into that policy, you can get that money back. But the thing about it, think about it like this. While it's just sitting there, inflation is going up. So even though it may seem like it's going to be a lot of money when you get it back, but it's really not, because 20, 30 years, whatever they said you're going to get back, inflation has gone up. So it's really not going to be a significant amount because of inflation. Now, if you miss payments or you cancel early, you may lose all of your premium return benefits. You might not get nothing back. This is something that they should share with you, but a lot of the agents would not share this with you. Let's say in 20, 30 years, you miss a payment. And see, the thing about the insurance premiums, with insurance premiums, they give you at least a 30, 31 day period if you miss a payment in order to catch it up before your policy lapses. So if that happens when you miss a payment, it's a possibility that they won't give you your money back at the end of the term because you reneged on your contract. You reneged on the contract. So you really would have to sit down and talk with your agent to make sure that if something like this happens, would you still be able to get your money back? Because a lot of them, these are stipulations that they have in the policy that your agent may not share with you if you don't ask. If you don't ask. Now, let me give you some simple comparisons here. So even though a lot of people think this sounds really good with getting your money back at the end of the term, not realizing that they're paying 2 to 3 times more for whatever policy they have. Let me give you just a breakdown so you can fully understand what I'm trying to explain to you. Let's just say that you are 30-year-old non-smoker male. 30-year-old non-smoker male. And you have a 30-year term policy, $500,000 30-year term policy. And this is the standard, just the regular term insurance, not the ROP return of premium policy, but just a regular standard policy, term policy. And you're paying $30 a month for this. So the total you paid over 30 years into this is like $10,800, $10,800 roughly. $30 for 30 years is about $10,800. Now, at the end of the term, no, you're not going to get anything back. Because with term insurance, that's what it is. They cover you for the term. But let's just say you had what they call the ROP, which is the return of premium policy. Let's just say you had that. All right. And your monthly payment is $90 a month. Because that's what it is. You see the difference? You got the same type of policy, which is a $500,000 policy. You're a male non-smoker, and you paying $90 a month. You see the big difference? So with the regular term, you only paying $30 a month. But if you get an ROP, which is a return of premium policy, they're going to make you pay $90 a month. So you're basically paying them $60 extra a month for them to hold your money for you for 20 to 30 years, however long, what we said a 30-year policy. So for them to hold your money for you for 30 years. Okay? Now, with the savings that you could have with you doing just a regular term, because remember you're paying $30 over here and you're paying $90 over here. So you are basically paying $60 a month difference. So let's just say that you took that money instead of paying for the return of premium policy at $90 a month. Let's just say you took the regular term and you're paying $60 less, but you take that $60 and you literally take it and you invest it in, let's say, just a mutual fund. Let's say you invested in a mutual fund and you're gonna invest it, and we're gonna say bare minimum at 7%. 7%. We go to the low of the lowest. 7%. You're getting a 7% annual return on your investment. So that means after 30 years of investing, your $60 that you're saving from paying for that return of premium policy, after 30 years of savings of it or investing, you have $73,000. You have invested $60 a month for 30 years at a 7% interest rate. That means that you have $73,000 accumulated. Now, with that $90 that you paid for that return premium, with that $90 that you paid, after 30 years of making your your $90 payments after 30 years, that comes to a total of $32,400. $32,400. So what they're going to return to you is $32,400. But look, what if you had take that extra money that you given to them to hold your money for 30 years and you put it in a mutual fund and invest it yourself and I went to the bare minimum at 7% interest of return, and you have $73,000. Would you prefer to have $32,400 or $73,000? It really doesn't take a rocket scientist to really figure this one out, y'all. You see what I'm saying? It makes no sense. Why would you pay them 2 to 3 times more to get insurance, even though they say they're going to give you all of your money back? But why take that chance, or why take that, I call it a waste, and put money aside and it's not accumulating any kind of interest at all? It's just sitting there when you could literally take that money and it could be invested and you could be making money off of your money that you have sitting on the side. Please post in the comment section if y'all understand what I'm trying to explain to you. Please put yes. If you understand what I'm trying to explain to you, please put yes in the comment section so I can know that y'all really are paying attention and you really understand. But if you don't understand, please post something in the comment section and let me know that you really don't understand what I'm trying to explain to you. Because it really makes no sense for you to just set money aside for 30 years and it just sitting there. Even if you put money in a savings account, you're getting something back or some type of interest back on it. But with these return of premium policies, it's just sitting. You're not accumulating nothing, no type of interest at all. It is just sitting. It is just sitting. Now, let me explain this, what they probably ain't gonna tell you either. This is the thing. Let's say that you have a return of premium policy and you have riders on your policy. It's a family policy. Let's say you got a family policy and you have your kids on the policy with you. You have your spouse on the policy with you. Guess what? The only person that they're going to pay the money back, for the premiums back that you paid into the policy for, is the insurer. So if you have riders on your policy, they're not returning their money. The only money you will get back is the person who is the insurer on the policy. The insured on the policy. That is the only person that will get money back. So if you have other people listed on the policy, they're not going to give you the money back for those extra people that you have on the policy. It's only for the one person who is the insured, the main person who is on the policy as the insured. All the riders, you will not get return premium back for these extra people that are on the policy. So even though they say you get all your money back, you don't get all your money back if you have other people on your policy. if you have other people on your policy, they're not going to pay you back for the insurance that you had on these other people. So any children that were connected to the policy, you don't get money back for what you paid for their coverage. If you had a spouse, you don't get the money back for what you paid for that spouse on the policy. Okay? Now, let's see. What else I want to explain to you? I'm going to go over some reasons why they may not give you your money back. These are some reasons why you may not get your money back for a return premium policy. These are some reasons. So listen up, guys. This is very important. These are some reasons that you may not get your money back. So one of the reasons that you may not get your money back, like I explained to you earlier, if you miss a payment, it could be something in your policy. You have to read your policy to let you know that if you miss your payment, you have reneged on that contract. And so now you're not qualified for the return of premium. You're not qualified because you didn't stick with the terms in the policy. You may not get your money back if you miss payments. If you let the policy lapse, let's say you let it lapse, and then you decide to reinstate. You decide to reinstate your policy. You let it lapse for 30 days, 60 days, whatever, and then you decide that you want to reinstate your policy. You've reneged on the contract. They'll let you, reinstate, but you have to find out from your agent, rather in the contract, it states that if you reinstate the policy, that you are still qualified for the return of premium. And 9 times out of 10 is not going to let you just fall back into line like nothing happened. If anything, that money that you had already paid into it, they're going to let, and it lapse at the period that it lapsed, they're going to just disregard all of that. You just lost that money, and they may let you start from the day that you reinstated the policy, and then you move forth from there. But as far as what you had before you let it lapse, that money is lost. It's gone. It's gone. So those are 2 reasons why they will probably not let you reinstate the policy. Now, another reason it could be if you are a chronic, they call it a chronic late payer. Let's say that you make your payments, but you make your payments late every month. You just late every month. That's what they call a chronic late payer. And so now, if you are a chronic late payer, it could be in fine print telling you that repeat late payments can impact your benefits. It could impact your benefit. So it's always good to read the fine print of your policy. Always good to read the fine print of your policy, you guys. Now, if you miss, let's say if you had a few late payments, but you always pay within that grace period. The grace period is that, like I said, that 30-day period, 31-day period. you're likely to still be fine if you missed the grace period or had a lapse. But then you really, this is something you need to check with them to find out what are the stipulations in the policy. What, you know, is this a reason for you to lose your return of premium benefit? Okay. Now, let's say you allow the policy to terminate. Let's say it terminate. Then guess what? The money you paid into it, they're not going to give you that money back. You don't get that money back. You only get the money back if you fulfill the contract. The contract meaning that you have to let the policy go the full 20 years, the full 30 years, however many years that you have the policy, your contract said, well, your policy says that your coverage is for, then you have to fulfill that entire contract in order for you to be able to get your money back. So if you allow your policy to cancel, to lapse, to terminate, you don't get your money back. If you surrender your policy early, let's just say that you voluntarily cancel your policy because you just for one, you can't afford it no more, or you found another policy and you want to go with another insurance company. You don't get your money back because you decide to surrender. That's what we call surrendering the policy. You don't get your money back if you decide to surrender the policy before the term ends. You lose out on all of the return of premium benefits. You lose out on that. So if you terminate that policy early, then no, you cannot get it back. Now, another reason why you may not get your money back, if you added riders, spouse, children, anything, those premiums, like I told you earlier, you don't get that money back. It's not included in your refund when they say you get all of your money back. Let's say you decide to convert the policy from a term, during the coverage, you decide to convert it from a term to a whole life policy, which what they call permanent insurance. Permanent insurance, all permanent insurance is, we went over this before, is whole life policy. It is a whole life policy with the cash value, so-called savings account attached to it. Let's say you decide after you had the policy for, say, 4 or 5 years, you decided that you wanted to convert it into what they call a permanent policy, which is a whole life policy, a cash value policy. You don't get your money back. You don't get your money back because now you change up the contract. You change up on the contract. So now you won't get your money back because you did not allow the coverage to go to the end. You did not allow it to go to the end. Now, let's say you died during the term. If you died during the term, of course, they're going to pay your family whatever the death benefit is, but they don't get the return of premium. They won't get any extra money. They're not going to get the death benefit plus the return of premium benefit. It's either one or the other. So if you die, then they'll get the death benefit, death benefit, whatever the death benefit was, they'll get that. If you don't die, then yeah, you can utilize the return of premium benefit, but you can't use both. You can't use both. You cannot use both. So, that's basically how this works. Now, taxes and fees. They don't tell you about the taxes and the fees. Well, it should not be no taxes, first of all. It should not be no taxes because you're supposed to get your money back tax-free. Tax-free. But some return a premium policies might deduct fees before returning the premium. It's dependent on the insurance company and the specific policy that the structure of the policy. So you're going to have to read the fine lines because if and ask your agent, because if you don't ask, they're not going to tell you these things. So your return of premium benefit, if they have like administrative fees, underwriting fees, policy service charges, rider fees, all of these things could be deducted before they give you your money back, the return of the premium at the end of the coverage. So you need to find out whether there are fees that will be deducted from your return of premium benefit before they actually send you a check for your return of premium. Ask about the administrative fees, the underwriting fees, the policy service charges. It may be rider fees. It could be a fee where if you're paying monthly instead of annually, they could charge you a fee for that too. You could get penalized for that too. So these are some things that you need to find out from your agent before taking this policy out. You need to find out, are there any, we call them hidden fees. Are there any hidden fees that will be deducted from my return of premium at the end of the term? At the end of the term. Now, this is how you know if fees are deducted. It should be stated, first of all, it should be stated clearly on your policy contract under return of premium section. The return of premium section, it should state there whether they're going to be, it should be clearly printed telling you if there are going to be any fees deducted. Now, some companies, they're going to spell it out line by line. Others, they're just going to say return of base policy premiums, return of base policy premiums. That's hint, hint, that's a red flag. Hint, hint, return of base policy premiums, that's a hint that rider fees, administrative fees, etc. are not included. Now, you can also ask your agent or your customer service rep. Some of us, with these different type policies that we're calling a phone number on TV, we don't have an agent. We don't have an agent. That's one thing I never could understand. I would prefer to have somebody that I can call and contact and I know and I see and I can put my hands on than calling a 1-800 number and not knowing who in the world or where in the world they are that I'm talking to, trying to find out information about my policy. But that's a whole nother issue. Now, does this policy return does the policy return 100% of the premium that you paid? And are there any deductions? That's something that you need to ask your agent. with the policy, return 100% of my premium paid, or are there any type of hidden fees or any deductions or exclusions? That's what you need to find out from your agent. Ask for illustration, a breakdown of how much you'll get back at the end of the term. This will show you if anything is being held back or excluded. This would actually show you if anything is being held back or excluded. Ask them for an illustration. Ask them for an illustration. So conclusion, this is the conclusion, y'all. These policies cost 2 to 3 times more than a regular term policy would cost. And they are charging you extra just for them to hold your money for 20 to 30 years, however long the term is. But that money draws no interest while it's sitting there. It draws no interest over time. And think about it. You could have that money where you're taking that money and you're investing it yourself, because what they're doing, they're taking your money that you're putting aside for all those years and they're investing your money. So they're benefiting from your money that you're paying extra to have them return your premiums to you at the end of the term. So we got to be smart about this thing, y'all. Let's not pay them. Let's not pay them to hold our money when we could be taking our extra money that we're giving to them to hold our money. We could be taking that money and investing it ourselves, and we can start building some generational wealth for us and our families. Point blank, period. Point blank, period. You should be taking that extra money, putting it in a mutual fund or in annuity, in some type of investment, so you can invest that money and you start building some generational wealth for you and your family. It makes no sense for you to pay them extra to hold your money for that long. It makes no sense, none at all. So that's all the tea that I have, y'all. Now, do we have any questions at this point? Do y'all have any questions, any comments, anything you want to add, anything you want to ask about what I just shared with you guys? And I'm going to tell you, with term policies are really the most inexpensive policies that you can basically get. You can basically get. And if you don't believe me, I mean, I can literally sit down with you, or if you send me information, say like your date of birth and whether you're male or female, or smoker, non-smoker, I can send you a quote and I can show you that a term policy is very inexpensive. Very inexpensive. I tell people all the time, it's best to pay a little bit now than a whole lot later, because I promise you, if you don't have any type of insurance, and if something happens, you're going to wish you had. You're going to wish you had. So why wait until something happens to try to find out whether you can afford it or not? You never know until you find out and ask, right? And so, like I said, if you want me to give you a free quote, I have no problem with giving you free quotes on some term insurance, because I want everybody to make sure that they are properly protected when it comes down to life insurance. We all need it. The only way that you probably won't need life insurance, if you got a whole lot of money sitting aside, so if something was to happen, your family will have enough to live on. Now, I'm going to tell you, a lot of people think that, oh, yeah, I got my 401k. Y'all, check your 401ks. Hint, hint, check your 401ks, because how the market has been going lately, the stock market is sad, very sad. A lot of people are scared. Those that don't know any better. I'll put it like that. They're scared. But now is the time to start trying to save and build some generational wealth and make sure your family is properly protected in case something was to happen. Now, if you just had a new baby, if you just bought a new home, if you just got married, these are some reasons, very big reasons why you should invest in you some life insurance. You don't want something to happen to your spouse and y'all just bought a new home and then something happens and now, even though the mortgage was dependent on both of you guys' income, now one whole income is gone, and now you're stuck with the whole mortgage yourself. That's how a lot of people I see in this industry doing this business. I see a lot of people, a lot of spouses that end up selling their home or losing their homes, or being homeless because they can't afford to continue to live the lifestyle that they were living when their spouse was alive, because one whole income is completely gone forever. So don't be that person. Even though your spouse may not be here with you, you can replace the income. Replace that income. I can show you how you can replace that income. So now, even though your spouse is not here, you can still live the same lifestyle you was living when they were here. I can show you how to do that. So, y'all, that's all I have, y'all. Like I said, I'm here on Tuesday and Thursdays at 5, live at 5. I'm live at 5 on all of my platforms. My Facebook page, my TikTok, and on my YouTube channel. So every live that I get on, I'm giving you guys different tips and I call it spilling the tea. Things that a licensed agent, an agent that's trying to sell you a policy, they're not going to share certain things with you, because if they do, you may not purchase what they're trying to sell. But I'm here to, I call it being on a crusade. I'm here to educate you guys so you will know what to ask, what to look out for, what not to get. You will know exactly what you're getting into before you get into it. Because the worst thing to experience is for you to have something happens, you have a policy and something happens, and now you find out you don't have what you thought you had. Now it's too late. We don't want that to happen to you guys. So that's why I do what I do. That's why I do what I do. I want you guys to be educated, and I want you to be mindful of what type of insurance policies you have already. Okay. Now, before we go, I want to thank my sponsors. I want to thank my sponsors. First, I want to thank Miss Latoya Orr. Latoya is actually, she has a mobile bartending mobile service, and it's called Lavish. But y'all, I'm trying to get to it. Lavish Cocktails by Toya, mobile bartending service. She does wedding receptions, private events, birthday parties, date nights, and more. You can book her by calling 864-523-2065. And you can look her up on Facebook, Latoya, or at Lavish. Well, Lavish Cocktails by Toya. That's her Facebook page. Now, we also have our last sponsor, and he's a DJ. He DJ weddings, DJ Q. He DJ weddings, parties, receptions, church events, corporate events, private events, brunch parties, community events. You name it, he can do it. And you can book him for your next event. If you want your guests to have the time of their life, they would never leave the dance floor with DJ Q running the show. So go and book him on his Facebook page at DJ Q at Original, ORRIGINAL Sounds Entertainment. Go book him on his Facebook page, DJQ at Original Sounds Entertainment. Now, if you want to be a sponsor on my show here, you can hit me up, and it's very, 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 very inexpensive for you to become a sponsor. And I'll shout out your business. I'll shout out your event if you're having a big event coming up, and I'll definitely shout that out and give my followers all the information about your event and your business. Now, we are always looking for new agents to come on board with me. Y'all, I love what I do. I love what I do. I love what I do. Like I said, I've been doing this now for 15 years, going on 16 years. I've been a licensed agent, and I just love what I do because I know that I'm helping people. I know that I'm educating people. I know that I'm saving people, really saving people when it comes down to whenever something happens to them in their family, they're properly protected, and they can grieve without trying to figure out how they're going to lay their loved one to rest. So we are always looking for agents to come on board with us. And with this, you can come on board and it can just be another way for you to make some extra income. Or you can come on board and you can make it out a career like I did. The choice is yours. You know, you come on and you can do part-time, you can do full-time. It's totally up to you. You come on board and we help you get your license. We pay for all of your licenses that you need in order to do this. And not only do we do insurance, we also do investing. We help people with investing in mutual funds and annuities, help them with their 401k retirement plans. So we don't just do life insurance here. We also help people with showing them how to teach people how to build generational wealth. So we would love to have you come on board with us. You can hit me up if you're interested, and I will share with you. And when you come on board, I'm going to teach you everything that I know. Everything that I know, I'm going to basically teach it to you. So you will be able to share that with your family, your friends, your community, your church family, your loved ones. You will be able to go out and you will be able to help them too, and show them how they can build generational wealth, and also make sure that they're properly protected while you're making some extra income. With this, you have to have a license, a state license to do this, but we help you with that too. We help you with that too. And with this is not like, and no disrespect to people who do these other jobs like selling soap, selling vacuums, selling, it's nothing like that. You make really, really good money here. You can make more money than a person would bring home in a week's time. You can make that doing just within 30 minutes to an hour. You can do that. So hit me up if you're interested. I would love to sit down with you and share with you what we do and how we do it. Okay. And bring you on board so you can start doing it too. But that's all I have, y'all. Thank y'all so much. And I will see you guys on Thursday. Now, on Thursday, we are going to talk about, what is it we're talking about on Thursday? Paid up life. Paid up. I know y'all heard about that before. Oh, you don't have to worry about it. You heard people say, oh, my insurance paid up. I ain't worried about that. It's paid up. Y'all, please come back on Thursday so I can share with you what they're really talking about. You gonna be amazed. You will be amazed at what they're really trying to say when they tell you it's paid up. I'll see you guys Thursday at live at 5. Y'all have a good one. Yeah, I'm not off yet. Yeah.